and how to hedge your positions at a point when the Nifty is staring at the 5600 mark and has actually scaled that peak as well. Let's start with the usual disclaimer as first. Please do consult your financial advisor before initiating any trades, because the futures and options market can result in windfall gains but also cause deep losses. So first, let's quickly start off with a recap of what is actually happening ahead of expiry in the futures and options universe. You are seeing some bit of cash-based buying, mainly in consumer goods, metals and financial services stocks as well. Investors are accumulating fresh short positions in the July contracts, however, and fresh shorts are seen mainly when it comes to auto, infrastructure and underperforming sectors like cement as well. Market-wide rollover, and that has already scaled up to the 58% mark. That has been done and dusted, with now 5610 to 5625 on the Nifty now continues to remain the major supply zone. Dr. Narayan, good afternoon. Let me start off with you. What's the risk that, considering we are sitting at 5600 levels, there may be some bit of squeeze that may actually come in the calls, and therefore we may not actually see any more upside from these levels?
Yeah, actually, I would think a little differently from that. I think a squeeze could, be a kind of a double-edged sword right now. Because you see, 5600, you have seen a build-up of about 74 lakh shares, and this build-up has come recently when the market went lower. So, I don't know, there may be a possibility of an upward squeeze of 5600 short calls as well. But, I mean, if you ask me on a personal basis, I really wouldn't put too much bet on it, but, everything in the market is probabilistic. So, I don't want to shut out that as a possibility. But on the charts, as well as looking at the sort of movements, 5600 is the resistance range. Somewhere around 5590 to 5610 is what I had provided on the channel as well a few days ago. We are trading in those zones, so therefore, sort of thinking logically and rationally, one should be taking long positions off, no doubt about it. But then there have been many times, particularly related to the days of slightly where the market has been taken by surprise near expiry, where something very unusual has also sort of happened in the past. In that context, maybe one should slightly highlight the very large build-up in the 5700 calls today. I mean, at the last count, I saw about something like 19.5 lakh shares being added, and the premium there was just about $2. So clearly, that's not a short. So I take that to be a long. Now, this could well be a lottery ticket case, someone just sort of punting, that this, say the Nifty will flare up and that it's a small rate to try and pay for a 5700 call. At the same time, 5600 puts, you are also seeing a fairly substantial addition. Very difficult to say whether this is long or short, but both these additions in OI very near the money is something intriguing, which indicates that one should keep the probability of a large move on the last day as being a very distinct possibility.
Mitesh, want to get you in on this.